Good morning. I am Riikka Laine-Tolonen. I am CEO for S-Bank, and I'm together here in the studio with Mika Heikkilä, our CFO. We have a pleasure to welcome you to this webcast where we will present our results from January to September 2023. Strong performance of S-Bank continues and interest in our services is growing. Our operating profit was 103.9 million euros. The improvement in performance and in all other key figures was especially driven by a strong increase in the net interest income. The net interest income rose with 150%. The positive profit development was also supported by a steady growth in the number of active customers and customer activity, and this created a good basis for positive fee income development too. All our key volumes have been growing compared to the corresponding situation last year. The cost-income ratio was improved to 54 basis points, and also our capital position was strengthened and the capital adequacy ratio raised to 18.1%. I want to thank our customers, employees, owners and investors for the successful performance, and I am especially proud of the continued growth which combined to solid financial position gives us a strong basis for the next chapter of S-Bank. As we already announced a bit earlier, our outlook for 2023 has been changed, and we estimate that the operating profit for full year will increase to more than 2.5 times higher compared to the previous year. And this is of course because of the continued rise in interest rates that is having a positive impact on the bank's performance. However, we want to note that the outlook is of course subject to uncertainties which are related to the operating environment. The economic uncertainty and adjusting to higher interest rates will continue in the fourth quarter for sure. And while the economy is of course supported by strong employment and shrinking inflation, the interest rates will remain on a higher level. Economic growth is expected to slow down in Finland and elsewhere in the world too. The risks of recession for next year have increased, but any downturn is expected to remain moderate. And of course, already the prevailing interest rates and increased costs for housing loans and living costs have a negative impact on some households and also may have negative impact on some of our customers too. Some comments from the performance or an environment as well. As mentioned already, the economic outlook has weakened, and for sure there are indicators that suggest darker times. On the other hand, the peak in prices is most likely now behind us, and interest rates may well have also reached their peak. In other words, there is some light in the tunnel. And Finns have been very resilient, which is of course great. However, there are still some customers who will face raising costs because their housing loan interest rate is going to be reviewed on a higher level. Especially times like this, it's important that we are there for our customers. And actually, our purpose is to offer everyone a chance for a bit brighter financial future. And that is why we think that it's fair that we offer our daily banking services for free for cooperative member customers of ours. We also pay customer rate for all our deposits and also for transaction accounts, where we at the moment pay 50 basis points for the daily balances. As mentioned, the upward trend in our performance has continued, and that is very well supported with also with the growth in active customers. When we look back, our active customer base has grown with 64,000 active customers during the last 12 months. And that is, of course, a strong number compared to the peers as well. To us, this is a signal that the Finns are more and more considering S-Bank to be a viable full-service bank, and they choose us to be their main bank. My last comment relates to transaction, what we announced in May. So we are acquiring Handelsbanken's Finnish personal banking, wealth management and investment services businesses, and that is progressing as planned. I will comment this a bit more in a short while. Before that, I want to highlight some key figures and performance indicators from banking and wealth management, which are two our main business areas. In banking, of course, the growth rate in deposits and housing loans, it is exceeding once again the market growth rate. In housing loans, our balance sheet grew with 4.2%, when at the same time market declined with 1.6%. This means that our market position has been strengthened. Our customers have also been active, and they have been using also our services and especially cards actively, and the use of Visa cards has grown over 20%, both in number of transactions but also in volumes in euros. And this has a very positive impact on our fee income too. And banking has, of course, benefited more about customer activity, but also the interest rate development, and that is visible in the operating profit. The operating profit was 108 million for banking. About wealth management, also well done. The number of unit holders has grown to 385,000, and in the number of subscriptions, we also performed stronger than the average in the market. About Handelsbanken acquisition, what I already mentioned, that we are progressing as planned. Good to mention also that this transaction will move us to the new size category, and it will make us fourth largest player in the market when we look housing private customer deposits and loans. And we are very happy to welcome household customers and employees from Handelsbanken to their new home. We are expecting that this acquisition will be completed during second half of 2024. As a part of the plan to finance this acquisition, we are taking also steps in the market, and in September we issued our first covered bond, which was used to raise 500 million euro funding from the market, and this bond was well received by debt investors, and it was oversubscribed with a clear margin. To us, this is of course a sign of investor confidence, both in S-Bank but also on our plans. Some highlights, key figures of S-Bank. I want to mention from this slide that our balance sheet grew to 9.8 billion, and also our number of employees was in September 837. It is a bit lower number what we presented in June. However, the underlying growth is around 10%, and we are investing in risk management and customer service people. Our customer base is strong, and we are reaching the customer base very well with online banking IDs, 2.4 million IDs. And also I want to mention that our customer base has 2.1 million S-Mobile downloads, which is also a channel to reach these customers. And as mentioned, customers are actively using our services. A signal of that is also the large card base. We are well reached with our service network, and also support our customers with wide cash withdrawal network together with S-Group. Our competitive position in the market we are well positioned to sustain above market growth, and that is because we are clearly differentiated in the market with the customer benefits, especially for S-Group cooperative member customers. Already mentioned free daily banking services. However, our offering is also seamlessly integrated to S-Group loyalty program, and we offer the very easy-use mobile app where we, in a unique way, combine S-Group services and our banking services. Already mentioned the wide presence and accessibility. Some other factors, of course, is needed to support this position and the potential, and that is, of course, large customer base, which we can reach with data-driven digital sales and marketing. And of course, it's important that we can offer full service for the customers, and that is well supported with the competitive wealth management offering, where we are especially in the space of alternatives and ESG well represented. And we have very focused business model focusing on private customers, S-Group cooperative member customers, but also selected corporate segments. Our financial goals, dividend policy and guidance is here as is, and on the left-hand side you can see the long-term financial goal and dividend policy. I'm very proud to say that we are actually already reaching these goals, except the number of 1 million active clients, where we are actually on a good way to, and Handelsbanken acquisition will give us an extra boost there during next year. Our strategy is to focus on the growth potential in the existing customer base, but also, of course, to execute Handelsbanken acquisition in a successful manner. This was what I wanted to mention about the performance, but also underlying strengths, and I will give now over to Mika, please.
Thank you. So I will continue with the key figures and financials. So here first you can see very strong growth in the operating profit, this 104 million in first 9 months. So especially the last quarter was very strong. It was totally 46 million, so it's more than the full year, total full year last year. Still our loan to deposit ratio is 84%, which is contributing good net interest income, while the deposit margins are still high and also the external funding costs are low. All key ratios they have improved also substantially. Return on equity was 17.9% at the end of September, and also return on assets 1.1%. Also, we have very strong and robust capital base. Here still the total income and operating profit in details. Totally the total income increased by 76.6% in this period on previous year, and the total cost around 15.4%. If you look the rolling 12 months total income, it was 337 million euros at the end of September. Here more detailed our income and cost analysis on the right hand side. You can see the income split by segment and income type. Here you can see the change what comes from the interest rates and the net interest income effect. So by business units, the banking segment is now 88% as it was 79% last year. And also the income split, you can see that the net interest income share is now 73% as it was 52%. As Riikka mentioned also on the left-hand side, also the net fee and income has increased over the time. So there is a good growth there. And on the right-hand side down, you can see also that the total income from total assets has improved a lot, and it was 3.6% rolling 12 months time at the end of September. Here, deposit base, how it's split with household customers and corporate customers. We can see here that the household customers has grown in 12 months times 5.9%, and the corporate customers is down 19.9%. So totally 8.2 billion deposit base, and from that around 552 million are time deposits. Our lending has steadily growing also over the time. It was totally 6.9 billion euros at the end of September. And both household customers and corporate customers growth has been between 4% and 6% on previous year. Also, asset under management up 4.8%, especially in the fund capital has increased 8.9% in 12 months time. In repayment holidays, it's quite stable, a little bit down actually in the last quarter. So no big change in the picture here. What comes to our credit quality, it's still quite stable, although we have increased our expected credit loss provision. They were totally 11.2 million this year, the increase of that. And it's mainly coming from the management judgment provisions or buffers, which are totally 5.5 million this year. And also we made in the second quarter, we made this model update to our forward-looking information model. So it's also affecting 2.6 million to the whole provisions. Why we have made these? It's mainly because increase in interest expenses and prices are expected or may further weaken the financial standings of customer households. So we are very conservative in that sense. Also, you can see that the coverage ratio has improved, especially in the stage 3 provision or coverage ratio is now 19.1%. In balance sheet, the only change was this covered bond issuance, which mean that in the asset side, the liquidity portfolio is much higher than at the end of last year, and still the household loans are the biggest item, around 58% of the total assets. Here, own funds and capital requirements. On the left-hand side, we can see that the own funds has grown substantially in this period, and the total risk exposure amount only moderately. With MREL requirement on the left-hand side, or on the right-hand side down, you can see that there are good buffers or margins to the requirement and actual own funds and eligible liabilities. Also capital position on the left-hand side, equity ratio has grown to 6.2% at the end of September. And also on the right-hand side, you can see the both capital adequacy ratio and CET1 ratio, which both are well above the capital or regulatory requirements. Here, the liquidity and investment portfolio, the change is that the liquidity portfolio is much stronger and bigger at the end of September because of this covered bond issuance. And also our liquidity is very strong. Level 1 comprised around 90% of the total portfolio, and liquidity coverage ratio was 258% at the end of September. So this was the last page from my side.
Yes, and what I forgot to say in the beginning is that we of course welcome questions. If you want to present questions, you can write them, and we are happy to answer any questions related to the performance and results. Looks like there are not any questions, so we thank you and wish you a very nice rest of the day.
Thank you.